Holy moly, all 11 sectors in the green with real estate leading the way. The S&P 500 was up almost 2% on the day, and small caps were up a whopping 2.66%. Do you feel that in the air, people? The FOMO, well, we're going to talk about it on today's Stock Market Brief Show. If you missed the move, don't worry. We're going to talk about what to look for. If you're in the move, congratulations. We're going to talk about what to look for. This is the show where we navigate the financial markets through the lens of technical and inter-market analysis. If you're new here, well, make sure to hit that thumbs up and subscribe to the channel if you haven't done so already. These shows are brought to you by my Patreons. In the pinned comment and in the description below, you can take a look at what we offer there. For only $9 a month, you get access to all kinds of cool stuff and my partners, Interactive Brokers, and Top Step Trading. See what you can do. For $49 a month, you can get $50K of funding if you pass the combine. It's no easy task, but give it a shot. We're going to hop right into today's show, starting now. All right, people, welcome back. I'm going to first point out once again from an intermarket standpoint just how important these couple of assets have been, because we talked about them for the last 3 months, even further than that. And when they are both up, you see a lot of red. But when they're both down, well, you typically see a lot of green. And we're looking at week to date, month to date. And what do you notice here on the month to date? You have this asset in the red and this asset in the red. What are they? You have the dollar, you have the 10-year yield backing off a little bit. And what do you see on the screen? A whole lot of green. So as yields are backing off, as the dollar's backing off, you're getting a little relief in the current state of the markets. And we're looking at a lot of different products over here. But I want to scroll down all the way to the bottom because this rally this week and not really, the month too, right? 6%. Yeah, and this month. So week to date, well, month to date, I guess it's only been 2 days, is being led by the financials. Even XLF over here is up a whopping 6%. So we're seeing a lot of relief in the financials sectors. Okay, if I take a look at the SPY on the daily chart, this is just how big of a move this is. These right here are the weekly expected moves. This is the 2 standard deviation level. Now, what's absolutely bonkers about this, one, that we're way outside of this move, okay? And when that means, which we discussed on the prior episodes, when you get outside of it, watch out, because if they're wrong by this much, right? If they're wrong and price starts getting outside of it, dynamic hedging could kick in. We could see just a monster move, and that is exactly what we got. But take a look over here on this left bottom corner. This right here was this current week, the week prior, the week prior, the week prior. Those were plus or minus the expected moves. And what do we notice taking place here? It started at 76, it increased to 89, then it increased to 94, and this week was $96 expected move. And even with that big of an expected move, and these are expected moves are based off of implied volatility in the options market, we doubled it, right? In just a few trading days, coming up to 430.26 on the SPY. Now, these are expected moves for the SPX, but still the same thing goes. It's pretty similar, right? 2 standard deviation move on the SPY, 2 standard deviation move on the SPX. Incredibly crazy moves taking place. Now, if we're thinking about in terms of probabilities, there is a 95% probability that we close within this weekly expected move. We have one more trading day left, and we have, once again, Apple reporting after the bell, which looks to be down. So we'll see how that drives order flow coming into tomorrow's trading session. I wanted to just call out, too, when you look at this type of move on the daily chart, you can just see a series still of lower highs. So remember, like when we got into correction territory right here, we're seeing a rip your face off type of move, but it is still a lower high as it currently stands. So what do we need to be prepared for? Well, we need to be prepared to see how this move digests and if it can hold. If we can hold above this level, great. So even if we pull way back down here in the coming week or so, right, that could potentially, and we bounce from that level, that would be our first higher low. Then we'd have to take out this wherever this current high is, and then this one over here. So this is a positive sign overall, but it's been a very strong move, and you got to be very wary to chase these types of moves. And the reason why I'm showing you to be careful chasing these moves is if we go back to before we hit the October bottom, what you notice here is we fell down, we put in a lower high, and then we started ripping the rally here in September of the prior year. And what you'll see is, I mean, if you go back throughout Twitter or what everyone was doing over here, this is where, everything is going to return to normal, right? We saw 1, 2, 3 just monster moves. And then all of a sudden we had a day that just ripped it right back down to the downside. And we're seeing a very similar type run here. And not to say that this is going to occur again, but what you want to pay attention to is if we do get a gap down, we start moving back down, you want to see a bounce and then eventually take out this prior swing high to give us the higher low and the higher high, all right? So you got to be patient in this current trend as we see. And if I look at the 15-minute time frame, yep, things are pretty crispy, right? We gapped up way outside of the daily expected move, which I'll show you here momentarily. But I wanted to call out this little kind of area where you can see this volume shelf profile. Sometimes these can act like magnets, all the volume that was traded here. So if we start pulling back within this area, we're above an inclining 5-day moving average. That would be right around the gap fill area, about 424. So if we do get a potential pullback, this would be the level that I'd say, hey, see how price acts within this area if it comes back down here to see if that puts in on a smaller time frame a higher low. Okay, that's what I'd be paying attention to. Now, how did the day start? The day started outside of the daily expected move. So the options market priced this in as far as risk. They were completely wrong, right? And what happens? We started way out here and it just pushed and we did a huge move closing outside of a 2 standard deviation, which is also very, very rare. And this right here is the weekly 2 standard deviation move, okay? So there wasn't really any digestion other than when we reached into that 2 standard deviation move, it bounced up, we consolidated, and then it pushed right out through it. So what we got to pay attention to once again is for the markets to digest. And I'll give you the updated moves here momentarily. Before I do, I wanted to show you really just how powerful, yield curve is and the bond market on these specific moves. And we've been calling this correlation out where when the yield curve inverted way back over here in July of the prior year, you'll notice that as the yield curve deeply inverts further, the S&P 500 actually found itself some legs and rallied and goes down, right? We inverted deeper, which is never a good thing. The SPY rallied, we inverted deeper, the SPY rallied, we inverted deeper, the SPY rallied. And what you'll see here is look at this huge move, this huge rally in the SPY. We're still well inverted, and just take a look how the yield curve is just inverting deeper. Okay, so as we're starting to trend up higher, is this just a temporary move in the yield curve where we're eventually going to uninvert and that could push price back down? I think that would be something to be mindful of. Doesn't mean you have to take immediate action. Somebody reached out on the comment section and said, well, is that even going to be bearish this time? Well, I don't know, but if you look throughout history, it has been bearish, so it doesn't require immediate action, but at least it provides us, with some sort of caution where we're not going to get caught off guard that if something bad does take place, we're not going to be like, oh, what just happened here? At least you'll have an idea of how to prepare for when we eventually, in time, uninvert, which will happen in the future. If we take a look at the 10-year yield, we talked about this negative divergence potentially playing out, coming down to around 46. Did we think it was going to happen overnight? Not really, but we came down to and around that area, creating a little bit of a hammer candle. So are we going to see some more downside? Overall, remember, this is just an up channel as it stands right now. Until we break, fully down from it, back test and head lower is when, maybe that's the end of the current cycle on the 10-year yield. But as it stands right now, we're just pulling back in an overall uptrend. If you take a look at bonds popped higher, so nice little move there. Overall, this is still in a downtrend, but a nice big move over here, 2.28%. I did trade some of the bonds. I got out of the position a little bit early in I think I actually got down probably right around the lows before it started ripping up higher. But most of my position was exited here, and then I exited a little bit more, and I'm out fully today as I traded. I didn't trade TLT. I traded TMF, and it was a smaller position, so it was a leveraged swing trade. If we hop into the SPY 15-minute time frame, I wanted to just call out the new daily expected moves, the new 2 standard deviation moves, and just show you how wild this weekly move is. So even if we come and have a 2 standard deviation move tomorrow to the downside, we'd still be above the upper weekly expected move. So the breach above it seems like it's going to most likely hold unless Apple just completely falls apart and the market follows suit, which you never want to rule it out, right? I mean, these markets have been absolutely crazy, but that would have to require basically a 3 standard deviation move to the downside to come back to the lower weekly expected move. So what are some other levels? The lower level over here, the daily expected move at 427.43, and then we're back above, back at it again, the quarter to date anchored VWAP. You can see the month to date, we're also above it, and it is inclining nicely. So a move outside of this daily expected move to around here could be a very cool opportunity to see how price responds in that area if it were to come down there, to play a bounce back up to that daily expected move, or potentially even higher. You have the 2 standard deviation here at 424. And then once again, if we pull back into that volume shelf profile we talked about, would be in line to around that 2 standard deviation move. So this little 425 to 424 area, if we come back within this kind of range come tomorrow, or even into next week, could offer up an opportunity to play into a higher low, and then potentially carry on its way to a higher high. That's what I'm looking at going into tomorrow. Other than that, be careful I don't think we're going to be gapping up there with Apple down in the after hours, but we'll see here what happens there, where Apple actually opens up. The RSI is burned to a crisp, so just be very careful chasing up in this area. Wait for price to contract like it kind of did over here, or wait for price to contract like it did over here, or how it did over here. Remember, price action, it moves between expansion and contraction, right? So you can see we expanded, move, we bounced up, we contracted, got tighter, we expanded, we contracted, we expanded, we contracted, we expanded. So now we got to just be patient and wait for the next contraction to take place to give us a better risk versus reward opportunity. That's all I got for you on today's episode, everybody. Hope it helps out. See you later.